I get asked a lot of questions regarding how do we handle personal versus business? How does that work as far as tax purposes? What forms need to be filled out? Things like that. Basically, it breaks down to whether you're a sole proprietor, LLC, S Corp, or if you are a partnership or a C Corp. So, based on what mechanism you have, makes a determination on what we have to do for tax purposes to make sure that you're good to go. A large majority of sellers that we see, typically, especially starting out, they're typically either a sole proprietor or they're an LLC initially starting out. And then at some point, you typically graduate to an S Corp. And an S Corp is typically once you've hit $50,000 in profit in a year, you'll switch over to that. But you're still actually an LLC. You're just taxed as an S Corp. That's what we generally see for majority of cases. Now, if you're actually a partner with another person in your business that is not your spouse, then you also may have a partnership LLC, which is a little bit different. So they kind of go through each of these various scenarios so you understand kind of how this works. For initially, first starting out, like I mentioned, you typically have a sole proprietor or an LLC. In both of those cases, we're typically doing what's called a Schedule C, which is part of your standard personal return. So for tax return purposes, generally when you're doing your business return, which is your Schedule C, which you'll notice this right here is a Schedule C. This is a form that we have to fill out as part of the tax return. But keep in mind, it's not the only thing we have to do as part of filing a return for businesses, just filling out this form. There's other work we have to do as well, but in general, this is the form we have to fill out that's attached to your standard personal return. So typically, when you're doing a business tax return for your LLC or sole proprietor, the personal tax return is also being done at the exact same time that your business return is being done as well. So it's all kind of like put together at the same time, because generally you want to make sure that everything's done properly on the personal side and the business side, because it's all taxed accordingly. The way the taxes work specifically for LLCs and sole proprietors is that everything that you make profit-wise just flows to you personally. It looks just like a standard W-2 does as far as income that comes on there. It's taxed exactly the same way. The only difference is that you also may have an additional 15.3% tax rate for self-employment tax. But as far as like when we're doing your taxes, generally we're handling the personal and business when it comes down to handling a Schedule C for sole proprietors or LLCs. Once you move over to an S Corp, that presents a totally different challenge because now you have two tax returns that have to be done. There's an S Corp that has to be done, and then there's also your standard personal return that has to be done. The S Corp is separate from a personal return in this instance, but still kind of taxed somewhat the same. It still flows through to you personally. It's not taxed separately, but that's kind of the way that works. The only difference is that 15.3% tax I talked about earlier, that self-employment tax that you have with your LLC or sole proprietor, that is split up when you do an S Corp. And there's a whole conversation we can have around that. Mostly it's trying to give you an introduction between these various stages here. So in this case, we will typically do an S Corp return separately, and then there'll also be a personal return separately as well. Keep in mind that there is different due dates for an S Corp return versus a standard personal return. Standard personal returns are typically due around the 15th of April, and then typically an S Corp return is typically due in March, around March 15th-ish is typically about the date we typically see every year for that. Now, the same thing with a partnership. Partnership is basically the same way as an S Corp. They'll kind of show you, like, this is actually an S Corp one here that I pulled up. And it's obviously a lot more work that has to be done on an S Corp than there is for a standard LLC. And so we do the S Corp return, do the personal return, same thing with partnership. You're doing a partnership return, and then you're also doing a personal return as well. So there's two separate returns you have to do once you're a partnership. And what happens with a partnership is that what's called a K-1 gets issued, and then that actually gets basically sent to each of the partners, which then they use that for the personal returns. And that's kind of the reason why that generally the S Corps and the partnership returns have to be done earlier than a standard regular return, because theoretically you need to have those K-1s for your partners to actually even do their tax return to begin with. So that's the reason why they have those done a little bit earlier. Finally, a C Corp has its own return by itself, kind of just like an S Corp and a partnership. But the difference here is that, yes, there's a totally separate return. It's ridiculously more complicated than any other return that we have. The difference is that C Corps are actually taxed at the C Corp level, and then any money you take on the business as far as a salary then gets taxed as well. So it's a little bit different with the C Corps, but that's basically the differences between each of the various options and what needs to happen with taxes. And generally, when we're helping you with taxes, we're handling, usually if we're handling with LLCs and sole proprietors, we're typically handling the business and personal all together. If we're handling the S Corp, it's up to you. If you want us to handle personal and the S Corp, we do that, but generally we'll do the S Corp. And then same thing with partnership. We do the partnership return, and then the personal return separate. And then same thing with C Corp. You would do the C Corp, and then the personal return separate. All right, that's about it on this topic. If you have any further questions, feel free to let us know. Thanks.